All righty. Good evening. Welcome to the Hurley Investments Market View commentary for Monday, the 9th of 2023. We are here, and for those of you that are new, it looks like we got quite a few new ones. All that we're deciding what these are, I guess, the short answer, right? Those new guys. What is the Hurley Investments Market View commentary? And there are a bunch of different ways to describe it, but the short answer, or the easiest answer, is what? 10 to 15 minutes education, 10 to 15 minutes stock market review for the week, and then it's 10 to 15 minutes of others information that I'm usually going over. And then the short answer is then questions. And questions are as long as you guys need it to be. But I normally try to focus or concentrate that first 15 minutes on some type of teaching principle. Something after the 25 plus years, 28 years in the market, something that I've known, I've seen, I've heard, I've done, I've learned, something that you can learn from my mistakes and not do, something that you can learn from my successes and understand why we're doing that for your personal portfolio. Now, I come from the education side. My parents were teachers. I've worked with, 3 or 4 different education, stock market education groups. And I know some of you are trying to or have done your own trading. So I work in that regard as well. And unfortunately, I'm going to warn you, today we're going to be probably an hour and 15 minutes. I've got a lot of stuff to go over as I've had a Christmas vacation. I've stepped away from doing this and I've worked tons of numbers, checked valuations. I basically had 3 40-hour weeks where I was taking the time to make sure that the numbers I had last year, which have changed to this year, have that same profit opportunity or potential going into the next year. So that's what I spent a lot of time doing. Let's just face it. I am so glad we are done with 2023. And that's only because, just to give you a general idea, that's only because we didn't hit the trough of our market, most likely. So if I say we didn't hit the trough, what does that mean? If I'm going to look at you guys and say, hey, we didn't hit the trough of our market, most likely, what does that mean? It means we're not all pigs. Oh, I love it. There you go. We probably haven't hit the low. We haven't hit the low in the cycle, right? So we haven't hit the low in the cycle. So why not? Why haven't we hit that low in the cycle? It's a simple answer, right? It's a simple answer. Why haven't we hit that low in our cycle? Well, yes, there we go. Perfect. Inflation, rising interest rates, right? Low unemployment. Government's always still spending money. They spend money whether they're never not going to spend money. I think we'll always have a deficit, right? But it really comes down to a couple questions that I found that I think are those questions that are really pretty interesting. So let me get those up here. All right, if I was to go through some of these with you, 5 key questions that we need to have answered for us to know if the market will stage a real rebound in the start of 2023 or test the lows or create new lows, right? Which is where I'm going with it. Where do the 2023 S&P 500 earnings estimates settle? Right now, we still have earnings estimates that are way too high, right? It depends where you're looking at finding it. But if you're looking at a 2023 S&P 500 earnings estimates forecast, they are all over the board. And they haven't figured it out. I mean, we have everything from a 10% gain to a 20% loss. There is so much by different firms that we don't know. If we were to look at real earnings, the S&P earnings for I don't know how you say it. For what they're really going to earn as a dollar figure, you still have companies up at $125. You have some that are down in the 80s. So we're just all the way across the board. Until we get probably this earnings coming in, how would you say it? Until you see this first quarter earnings and maybe how bad it really is, then we're going to keep being in trouble. We're going to keep being in trouble. And if you go through, in fact, I'm going to send that. I will add the link in here so that we have it. I should just grab it. I'll put it in here, but if you look at the earnings estimates, they're as low as 3,400 up to 4,500. We've never had, I mean, if you're going to 3,400 and 4,500, we've never had a 35% width. Or actually, if you want to do, what do you call it? Standard deviations, you've got about a 50% standard deviation spread on where we're going to end up. When do global bond yields peak? Pretty interesting. We said global, which means it won't peak when the S&P 500, excuse me, when the FOMC stops their rate hikes. You then need to allow 6 months for the US rate hikes to go through, for the interest rates you can have, the interest you can earn off of your money if it's just sitting somewhere within a US bank. It's a 6-month process there to get that figured out. When does core CPI fall below 5.0%? 3.0% year over year. Certainly is going to happen this first quarter. Mathematically, it really can't happen the next quarter either. But Kevin, gas is so cheap right now. Well, it is cheaper. But the key word there is year over year. And there's a lot to make up for that it just won't happen and again in the first or second quarter. When does unemployment rise above 4.0%? It's supposed to be 3.6, went down to 3.5. You know where our recession sits? And I'm going to go ahead, I'm going to be probably the first one to say it. Probably shouldn't say it, right? Our recession sits on the couch right now. The workers that could work and choose not to is the highest in history. Some people got paid upwards of $80,000 in some states to not have to work through COVID. And I'm going to say this as politely as I can, for the fact of the matter that that if you're a bump in the log, play video games, drink beer on the weekends, live in your mom's basement, you can stretch that out for a couple years. Our recession is linked to the mortgage rate shock of those who haven't known double-digit mortgages. I said mortgage rates. Let's do it that way. Which has been roughly 35 years. Huge, right? Horrible, I'm going to say this. Our recession is linked to the reopening in China. As much as the U.S. used to be able to walk their own step, doesn't happen anymore. It won't happen anymore. We can't open up the floodgates without the chips from China, without the cheaper employment. It's really pretty ridiculous. To look at it a couple different ways, it really, really is pretty ridiculous. So, let me go and grab it again. I'm going to say, so, and I grab this up here. I'm going to cut it. So where does that put us with the uncertainty, especially for the first? So that's why we call our trade, right? We look for that happiness. We look for the process of making up some of the downward movement by being able to convert that to more shares or dollar cost averaging without asking for more capital. And we're looking for that forward opportunity when things reverse. Now, someone asked me, and I'm going to respond to this question. Another so. So why don't you just get out and wait for the bottom, or get out on bad days and back in the next week, or time the market, right? Because let's face it, there's artificial intelligence right now that claims it's doing it, right? Well, does anyone believe that artificial intelligence and algorithm is really doing this? In fact, I'm just going to make this comment, right? Artificial intelligence only gathers / calculates the numbers quicker. That's all it does, right? It does not predict the future or give you some advantage on stock picking or making money in the stock market. It doesn't. All it does is gather that information and calculates whatever number the programmer puts in there quicker. So I've heard of the OpenAI. I've also recently gone through one that I actually went so far as to talk to the programmers, who was the true owner. Hey, Kevin, you're in that $30 million range. We look for little guys that are traveling or taking people's money and managing money. We've got this calculator. And I said, okay, what does it tell you? And of course, he told us, well, we're most on track for the mid to late 70s / early 80s stock market. And I think I sent that to you 3 weeks ago, right? The charts kind of look like, I think that was 3 weeks ago. Do I have it on here? Yeah, it was 3 weeks ago. The charts look similar, right? And so he expects this big down and this up, and it's going to be 7 to 10 years. And he's like, well, we're repeating the 70s and early 80s. And I kind of giggled. What makes you think that I would giggle that all that information gathered from the 70s, and the early 80s has any bearing on today's market? Someone give it to me. Now, I am surprised because artificial intelligence can write you a pretty good talk. It can write you a pretty good report. It's shocking because the one thing people forget about artificial intelligence is it's artificial. It's not real. What's different between us today and the 70s and early 80s? Just throw out what could be different between those 80s and the early 90s. Excuse me, the 70s and the early 80s. What's the difference? There we go. Now I see some coming in. We aren't at double-digit mortgage rates. Huge / bigger deficit spending. Much more globalized, right? Much higher oil prices. I'm going to do more technology, right? What else can we put in there? More information. I'll agree with that too, right? You can place a trade now without paying $25 and do it on your own. Less nationalism. We probably bought everything USA back then, right? Made more stuff here. The short answer, there are so many different variables that artificial intelligence will never predict the future accurately. It's no different than you or I. You guys could have said wars. The wars are different. I agree. Failing education system. I agree. I'm going to put wars in there. I'm going to put education in there. There is so much difference between 50 years ago and today. Well, Kevin, we had global economies. BS. We had walls. We had the USSR. We didn't do business with communism. It's significantly different. I just giggle because right in the title, artificial intelligence, it's not real intelligence. It's not intelligence at all. It's artificial. It's the gathering of numbers quicker than we are. No fracking in the 70s. Certainly. It's the gathering of information and the bias that you have that information point to that is artificial intelligence. So here's the biggest thing. Someone tell me, what is the biggest fault of artificial intelligence? What's the biggest problem with it? Other than it's not accurate, right? What is the biggest? Okay, let me rephrase that. That was a really poorly worded question to you guys. What is the biggest problem with artificial intelligence as it relates to the stock market? So interesting, David, I love it. The bias of the people that program it. So obviously someone wants it to do what it wants it to do, right? It's going to help them. Garbage in, garbage out, not being able to predict the future. Yes. Well, and I already said that. Mary's like, it's not reliable. It's not predictable. Otherwise, we would all just would use charting. I mean, let's face it. The biggest technology was some crap like VectorVest. Got fined, got shut down in 2008. Its past performance does not guarantee future results, right? Which it all is, it's just gathering information, making a prediction. But the biggest fault of AI is that it exits or closes a position because it has zero bias for the future. Let me explain what I mean there. I picked up a couple different reports. This one dates all the way back to March 9th of 2021. And here's the simple understanding. If you were out of the market, or you missed the 10 best days in the market over a 20-year period of time, just the 10 best days period. Actually, let me ask the group. If you missed the 10 best days in the market, what did that do to your return? You were gone. You went to cash. You closed out positions. You created a taxable event by closing out your positions for a loss or for a win. What do you think it did? What did it do to you to miss the 10 best days in the market? You lost half your returns. That is huge. You made me cry. You were an idiot. Okay, give me, you shouldn't listen to artificial intelligence. Dave said you lost 50% of your returns because some of these returns are pretty big. That seems like a high number. If you miss 10 days out of 20 years, 2 decades, you lose 50%, missed out on 30%, missed out on 25%. I see missed out on 10%. You actually miss out on over 50%. If you just sat through it, you'd have a balance of 61,685. If you miss the 10 best days, your balance would be 28,260. It's over 50% if you miss 10 days out of the last 2 decades. I've heard it said a little bit differently, and I found one other article that better describes it. No one saw it coming. Wow, these are awfully close to each other. No one saw it coming. Should worry about the 10 best days. And this is now shortened down to like the last, I forgot how many years it was. The investor kind of kept the market sensitive. They ended up losing 7% of their portfolio and standing. Some of them was over the span of 3 weeks. I like this one because it has more charts, more information. It's a less time period. But again, the simple answer is if you miss those days, you're going to miss a significant amount of the upside, right? So, does that mean you just get your butt kicked? You just sit in it and suck it up? Do you take 50% losses because you then have to have 100% gain? No, right? You then make something on the way down. Anything you make up on the way down is a profit on the way back up. That's the interesting part about all this. I found it shocking. Last week, I got a webinar invitation. And it was hilarious because webinar on concentrated stock positions. What do you think this one was about? What do you think a webinar would be about on concentrated stock positions? Thoughts? Co-drink concentrated. I'm not sure what you're trying to say there, Dave, but concentrated what, right? But Mary says, you suck at diversification, right? Maybe. Russ says stock with several options on it. Building a portfolio on concentrated stock positions. Hey, Dave is on board. William, you're not saying much. What does this mean today? Yeah, it was a webinar on how much smarter you would be if, and of course, let's face it, they already know what stocks to pick, right? If you're in Apple, if you're in, a lot of the FANG stocks, let's face it, they had a lot of the FANG stocks. But they're basically saying, hey, what if you do the work? What if you work the numbers? What if you find undervalued stock positions? And it's kind of funny because they used Ford and they used Bank of America and Apple, and of course they timed them and sold them at the highs, right? Which goes against our thought process of getting in and out and magically picking highs and so forth. But it's very interesting to see the comments on, hey, join us and we're going to do the research for you. And we're going to give you undervalued stocks and you'll pay us like $199 a month. And they guarantee that like in the next 10 years, they'll trade at a higher stock price. Notice how I didn't say who they were, but reminder, the webinar concentrated stock positions. And I just giggled because it was asinine. Unless an Apple goes out of business, a Bank of America, a Visa, yes, there's an opportunity. Not likely, but unless they go out of business, almost everything's going to be up 10 years from now. And why would I pay you $2,400 a month to go work some PE numbers that take all of 5 minutes per stock, right? If I worked on all of our core holdings, it'd take me 35 to 40 minutes at, $2,400 a year. That's like paying me $3,600 for that 40 minutes of work. I also think they give you out like one stock a month, right? That's guaranteed to go up in the next 10 years. And I do all this research for $199 a month. Once again, shocking. It's really shocking. Kevin, but you don't know if we're going to have a recession. No, my artificial intelligence is just like everybody else's. It's artificial. But this was introduced to me by one of you guys that I really like where it's at. Are we going to have what's typically deemed as a recession? Yes. Even though we can no longer define what a recession is, with the idiot we have in office and the dummies we have for Fed chairs, apparently we're going to change the definition of a recession for this derelict administration we have in our White House, for this ridiculous amount of FOMC economists that won't define that we're in a recession, yet they're an economist. It just blows me away how stupid people are. It is ridiculous. But it's 2 consecutive quarters of decline in a country's gross domestic product. We went through a recession last year. We should probably come out of it here in December because we'll have 2 positive. We're going to go back into one beginning of this year, most likely. Predictions on a recession. Well, you can take a look at all the companies that are firing their employees right now. Higher interest rates, higher inflation numbers. I mean, let's face it, right now, all we've done is drain our strategic reserves. So the next run on oil is going to be that much worse running into next year. And we're already at what, $80 a barrel basically? 79. The only reason why our gasoline prices are as low as they are is because we've unleashed the floodgates, right? Our oil is plentiful until we try to replace it. Which really, talk about a national security issue. Let's cut off pipelines. Let's make it harder to be self-sufficient. And someone had to let me know, well, Kevin, under Trump, we were self-sufficient without the pipeline. We were energy efficient in oil. We turned on the spigots. I agree. So, yes, we don't need another pipeline. It would be what, our 5th or whatever. We don't need another pipeline to be energy efficient. I understand it. But it sure as hell makes it easier, right? It sure as hell makes it a lot. It gives us the better opportunity to have more oil, to process more oil, to be able to ship more oil overseas. I mean, the pipeline just gave us a better opportunity. So yes, for those that are going to say, well, we were energy deficient without of it, do we really need it? If you want to define it as being energy sufficient or energy dependent, no, we did need it. We proved it. We get it. But would it make it so much easier for us to remain energy independent when it comes to oil? Yeah. Would it make our gas prices a hell of a lot cheaper without inferring the cost of getting it shipped from the Middle East to here? Yeah. Would it be better for the majority of the American public? It might not be good for the land that it crosses over. It might not be good for the oil leaks that occur, but does the majority outweigh the needs of the few? Probably. And that's easy for me to say because it's not going across any of my land. It's not possibly leaking oil on any of my land, any of my drinking water. I understand it. It's kind of funny though, because if you really understood what those pipelines are for, we don't just ship oil through those pipelines. We ship all kinds of liquids. Do you know your milk could be shipped through an oil pipeline? It's just a mode of transportation. So, interesting article that talks about the recession. Earnings dates are coming up. I've got them listed. We're going to have Bank of America and JP Morgan at the end of this week. I believe we have our protection on. We rolled them up. We will leave it alone. I saw someone type an order in or a comment in that earnings will dictate where we go the next couple of weeks. It actually is Fridays. JP Morgan, Bank of America, BlackRock, Citigroup, Delta Airlines, United Healthcare, Wells Fargo, Blackstone. There's a BlackRock and a Blackstone in there. We get hit with our first week or first round of banking. In all honesty, it probably will be really good for JP Morgan. It will probably be really good for Bank of America because they're not just linked to mortgages. It'll probably be really bad for Citibank. It'll probably be really bad for Wells Fargo. The beauty of having some banks that diversify what they do is just not loaning money for excuse me, for residential mortgages or just for commercial mortgages. They do other things. We should see some good opportunity there, but some really bad numbers coming from other banks. It'll be interesting to see how the market interprets Friday's earnings. Economic reports, Thursday is a big day, CPI. We probably will get a big push as CPI comes down this Thursday. 100% related to oil. It's not related to food. It's not related to services, technology, chips, commodities of other kinds. It is oil that will help us get down. Let's see here. Our markets, definitely bullish on the Dow. Need to change this from 3 weeks ago. Bulkish, I like that. We are bulkish on the Dow. If you ask me where the weeks are going to go, I was going to say higher. And yes, I will answer that question in just a second. S&P, we are technically bullish, but we could have a crossing on the RSI. We're at 51.32, 1.32 points above the median line. We are laying on top of each other for the MACD. We just barely missed getting above the 50-day simple moving average. If I was to check right now, let's see what futures are like. Well, China's going higher. S&P futures are down. Not by a lot. Not a whole lot's not being said right now. We're just down by 6 points, 0.15. We're actually, these futures don't matter because it's just algorithm trading off of that 50-day simple moving average. And then our favorite index, we are still bearish, but we're close. We're close. Someone asked me the question, Kevin, you went through all of this getting out, right? You went through all this getting out. This is why we were up. And I've got to go check the numbers. It was last week. Last week. That's why we were up 4.52 last week on a S&P 500 plus 1.45. So it's pretty neat that, you know what? If I sold everything off, stuck everyone in the S&P, I would beat the S&P this year, even with my management fee, by 0.5% or more. But we don't do that. We don't do that because we have all this other opportunity coming up. If you were to ask me where we're going to go this week, I would have said lower. My thought process would be lower because we are hitting that 50-day simple moving average, which means tomorrow you might see us start to get protection back on for our earnings coming up. When you read the big picture, definitely read what it all means. What it all means and what it really comes back down to is you don't fight the Fed, whether they're making the correct decisions or non-correct decisions. You don't fight the Fed, and the Fed are still going to raise interest rates. We need to be protected for the interest rate hike that will come in February. And we're just going to have a dismal first quarter. Numbers are probably not going to be what they needed to be, primarily due to shortages. We still had shortages. Apple wasn't selling as many iPhones as they could. They will probably miss their numbers. We're going to go into full collar trades with short calls for Apple going into their earnings based on, I won't call it credit checks, but line checks, product checks. How many deliveries have been out? Apple probably won't make their number. Market will find some way to bag on Apple. Okay, where else are we at? So is that why I stay in Baidu? No, I used to stay in Baidu because Baidu was the perfect stock over summer. The sell and may go away crap. China would always do really well. I stayed in Baidu because that way I could beat the market pretty easily over summers when Baidu was taking off. I'm also in Baidu because we want a piece of the second largest economy in the world. I chose Baidu because I've been with them for well over 14, 15 years. They have tentacles of revenue by owning a third of Alibaba, a third of JD, 2/3 of Tenet, IQ, they own a bunch of it. I mean, they're just all over. They're in everything possible, making as much money possible. And they've already made those prior investments. So they got hit a little bit from Cathie Woods, got hit from heavily investing. Those investments should start paying off in the near future. All right. The Dow Jones performance beating the S&P 500. Here's why. Basically, it's beating it for the most in decades, which means it hasn't beaten it through most other decades. No one really invests in the Dow. It's just something they use on TV. Someone trying to explain why being down 42 to 48% in a traditional 60-40 portfolio is now a good idea to be in it. Kind of not ever, because it never beats the S&P 500. Pre-interesting article, the market cap falls under $2 trillion as sell-off continues for Apple. It's a logistics number, so do pay attention to it. S&P closed out a dismal year with the worst loss since 2008. Very interesting read on just how ugly last year was. But a very interesting read that I would suggest you take some time with. China reopening earlier than expected could hit supply chains in the short term, but boost growth for 2023. Here is the back end explanation on why we're going to make more money and do better towards the end or the second half of 2023. I would tend to agree. I have the two articles I had on the volatility there for you, and I think that finishes that. I have questions, but how are you looking to trade? Currently running mostly stocks without protection, but getting ready for earnings by protective puts and full collar trades. So that would be the expectation. All right, what questions do you guys have for me? What? Man, I knew you were going to ask that. Um, William, I'm going to kill you. For years, I've talked to you guys about perspective. And you can't use perspective as an excuse why you're sucking it in the stock market. But my Jared is doing better. He's doing significantly better, comparatively speaking. But for Jared, I could not see a growth pattern for him day by day. He wasn't getting better week after week. I had to really stretch it out to month over month and compare it to him dying in the hospital and coming back and being shocked and being paralyzed and not being able to speak and a tube down his throat and a tracheotomy in his throat. I mean, it was so hard. So all these years, because of my experience with collar trading, because of my experience seeing the process work, my experience of our results in 2020, it's very easy for me to tell you guys that you need to see the perspective because I have the experience behind seeing the process work. And I had a really hard time, William, last year of waiting until life isn't hard before I decide to be happy. I was pretty darn depressed and angry and frustrated. And as it relates to the stock market, I think I have more compassion and empathy for those that are new going through this. So Bill and Russ, for you guys, I'm just like, yeah, suck it up. Abraham, you've been here for forever. Dave and David, you've been here for forever. William, I've given you some crap, right? Mary, you've been here for forever. I kind of gave you some crap, but now that I've been in a situation, I'm a little. I understand, and I can understand how to be more empathetic and compassionate because maybe you don't have that experience behind you. And so, a couple goals this year. I'm not going to swear as much. I'm going to spend more time in the scriptures. I'm going to do a better job of explaining stock market education and things that are going on in ways of not sounding so curt or you should have known it. I'm going to be more educative, if there's such a word, educative in what I'm expressing and showing to you. I'm going to take more hikes around my mountains to hopefully lose some weight. I want to try to lose 40 pounds. I'm sitting at like 275, 280. Need to get back down to 240, 235. And they're just some things I'm going to try to do to find some simpler ways of being happier. And one of those ways is to make sure I'm not so curt or matter of fact with you guys when it comes to explaining what our stock market is doing and the process. Our last process of these drops was 2020. If you want to, go take a look at, go to YouTube. Go to YouTube and do a search for Hurley Investments 2020 results. It was easy. It was 3 months down 20%, and then it rebounded higher. Well, now we're looking at like a year and a half down, and probably will be 2 years down before we rebound higher. So because you haven't experienced that, I need to be a little bit smarter in my explanation, and I'm going to do my best this year to be a little bit softer as well. That's for Jackie Kohler. A lot less frustration and swearing and matter of factness, a lot more empathy, compassion, and explanation. In case you're listening, Jackie. Jim, I've actually got some things lined up. It would be easier to make that call tomorrow. Just give me a time. Great question, William. Hopefully I have answered that appropriately. Are there any other questions I can answer for you guys? So again, someone just might have typed in, if you really do all that compassionate stuff, I won't know you. I'm pretty sure I named you by name and said, no, that doesn't go for you. You should know better. So no, everything I just said doesn't apply to you. But it is one of the things I'm going to do a better job in my explanations so that you guys have somewhere you're going to go to with it and somewhere that it can maybe be a little more helpful instead of, well, don't you know? I've been doing this for like 28 years. So yes, and of course they just let me know it's just chain yanking my chain. I get it. I wouldn't expect anything less of you, but that's because of the relationship we have. So thank you. Any other questions that you guys have? And Jim, you haven't answered me back. If I can, perfect. Yep, I will do that. In fact, it'll be closer at the 8 o'clock time. Central, or are you Eastern? Guys, all right. I don't see any other questions coming in. I appreciate you guys here. In that case, Jim, yes, expect me tomorrow, probably closer to 9. I'll call you about that time. Thank you guys. Appreciate you being here. I'll have this posted up. Well, I think Dave will actually have it posted up sometime early tomorrow. I definitely want you to go through and read these articles. So I'm trying to push them to get it posted immediately so that it's available for you guys. Appreciate your time. Have a wonderful evening. And Key will be up on Thursday, or I might be. I'm not sure how we're going to work that out, but we look forward to seeing you on Thursday. You guys have a wonderful evening. I'm trying to stall to see if there are any other questions coming in. But if there are no other questions coming in, guys, have a wonderful night. Look forward to our weekly commentaries, and I will see you next week. Bye-bye.